Welcome to Module 6, Part 1. Module 6 is all about credit, banking, and financial traps. But in Part 1, we're specifically going to talk about the banking basics. So if you recall, in Module 5, we talked about a budget plan and savings goals, and we built those together. Now, where does that money actually go? So, the tool that you need is a bank account, and that makes your budget and savings work safely and simply. It's where your money lives and moves. Have you ever had one? If you've never had an account or lost one before, that's okay. You have options, and we're going to walk through them together. You're not alone. Millions of people are unbanked or underbanked. And this lesson is about finding a door that works for you and walking through it. Let's talk about why a bank beats cash and check cashers. Every time you use a check casher or money order, you pay a fee. A bank account flips that equation. Your money is protected, your record is built, and your cost goes down. Your money is safe in a bank. If the bank fails, the government insures your money up to a high amount through the FDIC. Cash under a mattress has no such protection. Cash in a pillowcase has no such protection. It's cheaper. Check cashers and money orders charge fees every single time. A bank account usually does not. Over a year, the savings add up significantly. It also builds a record. A bank account creates a paper trail of your income and spending, a record that helps you qualify for housing, credit, and more later on. It also makes your taxes easier to do. And it saves you time. Get paid and pay bills without carrying cash or standing in line. Your money works for you, even when you're busy. If you have a checking account at a bank, that is usually your everyday money. Think of your checking account as your money in motion, the funds you use day to day for bills, groceries, and everyday spending. Everyday spending is generally reserved for your checking account. This account holds the money you're actively using to pay bills, buy groceries, cover daily expenses. It is designed for regular activity. And typically you get a debit card with it. Your checking account comes with a debit card. And that's a great way to pay bills online. No more trips to the money order counter. Your paycheck goes in and spending comes out. So if you have a bank account or checking account with your bank, your paycheck can go straight into checking and your spending comes straight out. Simple, trackable, and always in one place. Now, your savings account is your set aside money. Your savings account is where money lives when you're not spending it. It holds your emergency fund and your savings goals from Module 5 that we talked about, separate and safer. Keeping your savings separate and in a different account from your checking makes it much easier to leave it alone, out of sight, out of temptation. But it also holds your goals. This is where your emergency fund can go, and it's in the account that is building your future, not funding today. Your checking account is the funding today. Your savings account is funding your future. Also, some banks do have savings accounts that can earn a little bit of interest. And the bank basically is paying you to keep your money there. It's not much, but it is more than cash does. Because cash doesn't have any interest at all. If you have it in your mattress or your pillowcase, there's no interest building on it. Also, there are two different types of cards that typically come with having a bank account, and it's important to understand the difference between a debit and a credit card. These two cards look almost identical in your wallet, but they work in completely different ways. Understanding the difference protects you from surprises. A debit card spends your own money, and it's pulled straight from your checking account. When the money is gone, it's gone. You either have it or you don't. No bill comes later. Now, a credit card is borrowed money that you pay back later with interest. And if you carry a balance, then that is what you do have to pay back later. And that's a whole different lesson coming in part 2. But the simple rule is the debit is yours, the credit is borrowed. So for now, knowing the difference is the most important thing. Use debit when you want to spend only what you have, and then you use credit when you don't have it, but you need to spend it. Direct deposit is one of the most simplest upgrades that you can make to your financial life. Once you set it up, your paycheck goes automatically into it. There's no lines, no fees, no waiting. You can literally request a form, give account info, and then you receive your pay in your bank account direct deposit. Okay, you have to talk to your employer's HR or payroll department, and this form takes minutes to fill out, and then the benefits last as long as you have the job. Many banks also give you access to your money a day or two earlier with direct deposit. When you go to the bank to open up an account, there are some things that you need. You'll need a photo ID, a driver's license, state ID, or passport. Some banks accept alternative IDs, and you can just call them and ask them if you're not sure, though. You'll need your social security number, and this is used to verify your identity. Some accounts will let you use the ITIN as an alternative, but I would just stick with social security number and ask if you have any questions. Some accounts do require a small opening deposit, often $25 or less. Many online banks and credit unions require zero, though, so you don't have to have them. Some of them do, though. Each bank is different. So if a bank has closed your account in the past, you may be in the check system's database, but that doesn't mean that you're out of options. Okay, you can ask about second chance accounts. Many banks and credit unions offer second chance checking accounts specifically for people with past banking problems. They often come with fewer features, but get you back in the system. Don't give up. One bad past experience should not keep you unbanked. There's almost always a door back in. It might just take a little bit of asking and, working around it a bit, but just don't give up. Choosing the right account is so important. Not all banks are created equal. Okay, not all bank accounts are created equal. Taking a little time to compare options can save you some real money and headaches over time. These are four main things that we're looking for in a bank account, and I'm speaking from experience here. You want to look for bank accounts with no monthly maintenance fees, one that is an easy, super, super, super easy to avoid by setting up direct deposit or keeping a small balance. You want to choose an account with no minimum balance or a very low one, because high minimums can trigger fees if your balance dips during a tight week. You also want to make sure that you have free direct deposit and a strong mobile app to make managing your money easier if you can. Check that you can deposit checks and check balances and pay bills from your phone, because it sure does make it a whole lot easier and more convenient. Now, credit unions and online banks are often cheaper than big traditional banks, and I can definitely attest to that. I've had Cadence Bank, First Bank, Wells Fargo, Robbins Federal Credit Union has been so good. So it's definitely worth spending an hour comparing options before you decide. Please compare at least 2 or 3 different banks before you decide to open up a bank account, and maybe even make a list of questions and call and ask, or go in the bank and ask them questions and just explore all options. After you get a bank account, it is very important to use it well. Opening it up is just the first step. Using it well is where the benefit comes from. There are a few simple habits to keep your money safe, your fees low, and your balance healthy. So check your balance regularly, seriously, like every single day. Get in the habit of checking your balance often. Learn the differences between pending, not yet processed, and available, what you can actually spend right now. Okay, use your bank's ATMs. Withdrawing from your own bank's ATM is free. Sometimes using a different network's machine often costs $3 to $5 per transaction, and those fees can add up fast, but not always. It really just depends on who you're banking with. Try to keep a small cushion or a small buffer, like $20 to $50, so you don't accidentally hit zero. Running dry can trigger overdraft fees that make a bad day worse, and they're usually like $35 typically. Ask me how I know. Just kidding. Turn on alerts. Set up text or app alerts so that your phone tells you your balance, large charges, and when your balance drops low. This one habit catches problems early. Definitely keep an eye on fees. Fees are how banks make money, and most of them are avoidable once you know they exist. So here's what to watch for: monthly maintenance fee. Again, some accounts charge you just for having the account. So look for accounts where this fee is zero or waived with each deposit. Secondly, out of network ATM fees. We just talked about those. I would highly recommend sticking to your bank's network whenever possible, because a lot of times if you use another bank's ATM, it's going to cost you a fee from your bank and then a fee from the ATM owner. So just look out for that. And then thirdly, those overdraft fees. When you spend more than you have, some banks will charge you $25 to $35 per transaction. Guys, even if it's 50 cents, they're like, hey, you don't have 50 cents, but now you owe us $25 or $35. So make sure you keep a buffer and consider opting out of overdraft coverage just to avoid these entirely. So like your debit card will not even work. If you don't have the money there to spend it, it just doesn't even go through. The good news is that most of these fees are completely avoidable once you know they exist. And now you do. So choosing the right account up front eliminates many of them before they ever appear. The bigger, costlier financial traps, payday loans, predatory lending, and more get their own dedicated lesson in part 3 of this module. We're going to get into it. But read the account terms before signing anything at the bank. Always read it, even that little tiny fine print. Get out your magnifying glass, put your bifocals on, read everything before you sign. Set alerts to catch unexpected charges, and ask your bank to waive a fee. They often will. And now it's time for reflect and one step forward. A bank account is not a luxury. It is a basic tool that protects your money and time. It is very beneficial to have. So, you've covered the essentials of banking accounts, debit, direct deposits, fees, how to choose the right option. Now it's time to take one step forward. If you don't have an account this week, I challenge you to look up two banks or credit unions near you. Compare their fees, minimums, and whether they offer second chance accounts. Just research them, no pressure to decide yet. Okay? Either way, one step at a time. This is you building a financial system that works for you, not against you. And now in part 2, we're going to talk about credit and how it works. If you already have a bank account, thank you for hanging out with me for this session. Make sure that you set up direct deposit if you have not already, and then go into your banking app and turn on at least one balance alert. Both of these take under 10 minutes, and just really build that consistency of checking your bank account regularly.